Moshe Lander is the wonderful economics guru we go to from time to time from Concordia University, and he's hanging out on the line right now. Moshe, welcome back to the show.
Hello.
Hello. Now listen, we're going to get into inflation and the economy in just a second. But you know what? I got a couple of questions from some listeners here, and it all has to do with the story I told yesterday. And I think you know your money, you know your economics. I actually want to quiz you on this first, okay? Get your guess. So yesterday on the program, I told my story about getting my credit card bill, and I went to Miami last month. I went to go see some baseball games in Miami, and I got my credit card bill, and I saw the line item for when I bought my two friends and I beers. So 3 beers at a baseball stadium in Miami, tall cans, okay? I want you to guess, at the end of the day, after exchange rate on my credit card bill, how much in Canadian dollars did I spend on these 3 beers?
3 beers?
Yep, tall
in
cans.
Canadian dollars?
In Canadian dollars, tall cans.
I'm going to say $40 Canadian each.
Okay, thank God you said each, because if you'd said for one, I'm like, wow, how much could a banana cost? $10. So it was $78.91 for the 3 beers. So about $26 per beer. Okay. And to the listeners I just got Colin, and for everyone, I got 2 text messages in the last 10 minutes asking for the price of the beers. This is the last time I can mention it. $78 is the answer. Moshe, we've done that. You've played our game. You've played our quiz. Now let's get into the bigger game. What's going on with inflation in this country? How do you view the apparent cooling we saw yesterday as inflation decelerating to 4.3% last month?
Well, notwithstanding my inability to guess beer prices, I'm going to use my economic analysis here and say, this is good news. It's a nice big drop, but that's probably reflective of when you're comparing over the last 12 months. If the big increases came 13 months ago and then things have started to slow down, then it looks like inflation has slowed down as well. But, compared to, say, 13 months ago, you'd find that inflation is much higher. It's kind of the way that statistics is played with to make these numbers look good. The good news is that it is coming down. It's coming towards the 2%. Just like the Bank of Canada said. So I'd say that all in all, it's a positive sign.
So let's talk about the Bank of Canada, because, boy, have they taken their knocks from various people, politicians included, about how they've handled this, right? So what do you say? What's your progress report? How do you grade how the Bank of Canada has handled high inflation?
They're all fools. The Bank of Canada has done a great job. They did exactly what they said they were going to do. So, if you remember when inflation started rising, Quebec was still under pretty restrictive COVID lockdowns and masking, social distancing. And, the economy was in a perilous state that if the Bank of Canada had jumped like they normally would to increase interest rates, they really risked doing some damage to the economy because we couldn't fully fend for ourselves. But as soon as the last restrictions in Quebec came off, so did the gloves with the Bank of Canada, and they quickly moved to rein in inflation. And the fact is that they brought it down from over 8% and cut it in half in, 8 months? That's pretty good success. And it's going to continue to fall in the next 6 months, 8 months. And we're going to be back to usual probably beginning of next year. You
said the Bank of Canada did what they told us they were going to do. So then do we know, based on that, Moshe, over the next little while, what will they do now with interest rates, particularly in order to get to that promised land of 2%? What should they do?
So they've said that they're going to keep it on hold for now, but they're watching. And if inflation starts to get a little stubborn about coming down that last couple of percentage points, then they do reserve the right to increase interest rates. So I'm seeing some analysts are saying that they expect that there could be an interest rate cut. I think that's way too optimistic. I think we're going to see the interest rates just held steady for the next 3 months, and we'll probably have some sort of reevaluation at the end of summer. If we're still not seeing that they can get that last little bit squeezed out, they might just nudge it up another 25 basis points. But I think where we sit right now is probably where we're going to be for the better part of the rest of the year.
Speaking of keeping track, what are the boxes that would need to be checked in order for them to think about it? I'm thinking about homeowners on variable rate mortgages. I'm thinking about developers that are dealing with high interest rates here. What are the boxes that would need to be checked in order to think about that lowering of interest rates?
We'd have to see a pretty sharp economic slowdown. Usually when you have a recession, that's when you start cutting interest rates, and the deeper the recession is, the more that you would cut it. But beyond just seeing a recession, you'd have to see a stock market collapse, you'd have to see a housing market collapse, and something to shore up confidence. Cutting interest rates is also going to weaken the Canadian dollar, and so they do have to factor in that risk as well. I just don't see that we're that perilously close to some sort of bad economic environment that they're going to cut it. The labor market continues to be strong, wage growth continues to be strong, and the word they keep using for the economy is resilience. So unless somehow all of that goes sideways, they're not cutting interest rates.
And that other word, recession, nowhere to be found, right? So what's your, is that, because it seems to be a boogeyman, like a dark cloud. Ooh, but there's a recession, possibly, or we're in it. And I can't get a straight answer on this. What about that? Is that, or are we just is the economy so resilient that now that's been pushed aside?
So we're probably in an economic slowdown. And so I don't know that anybody wants to apply the word recession to it because that's a technical definition, 2 consecutive quarters of declining GDP. But I think you and I, having grown up in the 20th century, have in our minds what a recession looks like, crumbling economy, massively rising unemployment, and all kinds of economic instability. But I think if we have even a recession now, this type of recession is going to be one where you don't see those things. It's going to be a mild increase in unemployment, a mild slowdown in GDP. And so that business cycle is a little bit smoother on the downside. And so again, I don't know that it necessitates reducing interest rates to try and prop up the economy because it's not going to look 20th century style economic downturn.
Moshe, I always appreciate your insight, and thanks for playing Name the Cost of That Beer on the Elias Macko Show. I appreciate it.
Next time, let's do it for the Colorado Rockies.
Will do. I've never been to that stadium. I really want to go. Moshe Lander is a senior lecturer in economics at Concordia University.